What if you had $1 million to invest? How would you turn it into lifelong financial freedom? In this video, I'll show you how to invest wisely, avoid common pitfalls, and build wealth that lasts for generations. Ready to unlock the secrets of smart investing? Let's dive in. Welcome to Money Mindset. Today, we're talking about one of the most exciting financial milestones: investing $1 million in the stock market to achieve your financial goals. Whether you've worked hard to save, received an inheritance, or sold a business, this guide will help you make the most of your money. By the end of this video, you'll have a clear, step-by-step strategy for smart investments that align with your financial dreams. So, stick around, because this could change your financial future forever. Section 1. Setting your financial goals. Before you start investing, the first step is to set clear financial goals. Ask yourself, are you investing for long-term growth, like retirement? Do you want a steady income stream from dividends? Are you looking to preserve your wealth while minimizing risk? Your goals will determine how you allocate your $1 million. For example, someone focused on growth may lean towards stocks, while someone seeking stability would prefer bonds or ETFs. Section 2. Diversifying your portfolio. Diversification is your best friend in the stock market. It spreads risk and ensures that one bad investment doesn't ruin your entire portfolio. Here's a sample allocation strategy for $1 million. 40% in blue-chip stocks, stable, reliable companies like Apple, Microsoft, or Johnson & Johnson. 30% in index funds or ETFs. These track the market and offer diversification in a single investment. 20% in bonds, a safer, steady return to balance the risk of stocks. 10% in high-growth opportunities, emerging markets or promising startups for higher returns. This mix balances growth, income, and risk reduction. Section 3. The power of dollar-cost averaging. Even with $1 million, it's not wise to invest it all at once. Instead, use dollar-cost averaging, investing a fixed amount regularly over time. Why? It reduces the risk of buying during market highs. It takes advantage of market dips to lower your average cost per share. For example, you might invest $200,000 every quarter over a year. This strategy adds discipline and lowers emotional decision-making. Investing $1 million is a life-changing opportunity, and with the right strategy, you can achieve all your financial goals. To recap, set clear financial goals, diversify your portfolio wisely, use dollar-cost averaging to minimize risk, focus on dividend stocks for steady growth. Monitor and adjust your investments regularly. If you found this video helpful, don't forget to like, subscribe, and share it with others aiming for financial success. Let me know in the comments, how would you invest $1 million? Let's chat.